In the alternate version of exercise 8-1, we're initially presented with information about Rizzio Company's purchase of machine, and we're asked to calculate what's the total cost recorded for this machine. Or another way I could say this is what's the total amount capitalized for this machine. The term capitalized may seem scary. That just means simply what's the total amount recorded as an asset for this particular machine. So let's start to build on that information. Rizzio Company purchased a machine for $10,500 with terms 110, net 60, FOB shipping point. So it seems like a logical starting point is the actual invoice price from the vendor, which is $10,500. An exception though is that the terms are 110, net 60. What that means is if they do happen to pay within 10 days, they're going to get a 1% discount. If we look later in the scenario, it indicates Rizzio pays for this machine within the cash discount period. So very similar to how you handled a cash discount in the inventory chapter, if you take advantage of the cash discounts, it's a deduction of the overall asset. So when we talked about inventory, it was a deduction of the asset inventory. In this chapter, it's going to be a deduction of the overall machine or plant asset. So the cash discount can be calculated as the original invoice price of $10,500 times the 1% discount, because remember, 1% if paid within 10 days. So 10,500 times 1% is going to give us a $105 cash discount. We show it in parentheses because we're going to subtract it. That's that much less that they have to pay. So then we calculate our net purchase price as $10,500 original invoice minus cash discount of $105 gives us a net purchase price of $10,395. Now many of you would stop there and say that's the overall amount recorded as an asset or as part of the machine price. But keep in mind there's some additional detail here, including things like freight, adjustments, mounting, even some damages in regards to getting this particular item up and running. We need to look through those additional items and determine which of those are reasonable and necessary to get that asset in place and ready for use. If it's part of a reasonable expectation to get it ready for use and in place, then it should be included as part of the cost of that overall plant asset. In this situation, part of the cost of the machine. We should capitalize or record it as an asset just like the overall invoice price. It's just part of getting it ready for use. So let's read through our additional scenario. The seller prepaid the $237 in freight charges, but added the amount to the invoice and brought it up to a total of $10,737. Keep in mind, this particular shipment was originally sent on FOB shipping point. FOB shipping point means the buyer should have been obligated to pay the freight. For whatever reason, the seller went ahead and paid it on Rizzio Company's behalf, but Rizzio Company is still obligated to pay them back. So we're going to include the additional freight charges as part of the cost of that machine. $237 we're going to add on to the net purchase price. Freight's just part of getting that item to its location and ready to use. Now, you may ask, why didn't we deduct the cash discount, the 1%, from the overall freight bill? Keep in mind, the seller didn't ship it themselves. There's an independent carrier. The seller went ahead and paid the carrier for that, the full amount. Now they're just charging back the full amount to Rizzio Company. They're not going to offer the 1% discount on it. They've already been nice enough to pay it for Rizzio Company. They're not going to offer a cash discount on that freight. We read through our next sentence. The machine requires special steel mounting and power connections costing $726. It says requires. So this was an optional situation. In order to get it working, we've got to make sure we have the right mounting and power connection. So we're going to add $726 to the cost of the machine for mounting. Then we look and we show another $342 is paid to assemble the machine and get it into operation. Assembly, as long as it's part of a reasonable and necessary to get it into operating condition, again, add assembly to the overall cost, $342. In moving the machine to its steel mounting, there were some problems. In fact, this piece of machinery was damaged and they had to pay $180 in order to repair it. That is not going to be part of the overall cost of the machine. That would be something we would expense versus capitalizing as an asset. Again, it's something that we would expense. It's not reasonable and necessary. We don't expect as we're getting an item ready for use to damage it. If we do, it's not considered reasonable, so we would go ahead and expense it. Our last item is materials costing $40 are used in adjusting the machine to produce a satisfactory product. And we're not quite sure because we've just talked about damaging it. Are we just correcting from the damage? But we read a little bit more and it says the adjustments are normal for this machine and are not the result of the damages. Again, it's just an expectation. It's a more complicated piece of equipment. We need to do some adjustments. So we're going to add that normal adjustments of $40 onto the overall net purchase price. Again, summarizing, net purchase price of $10,395 plus freight of $237 because it was shipped FOB shipping point, reasonable mounting charges of $726, assembly of $342, and normal adjustments of $40. The overall machine cost, when we add up all of those items, is going to be $11,740. So we looked on the balance sheet for this particular machine. The total cost would be capitalized or recorded as an asset of $11,740, including anything reasonable and necessary to get it ready for use.